This episode of Untold Stories is sponsored by Bit Casino. You'll hear more about them later on in this episode. What is up, everyone? I am Charlie Shrem, and you are watching and listening Untold Stories, where twice a week, together, we get to weave a personal, nuanced understanding of how crypto came to be, where we are now, where we're going, by understanding the individual stories of people, the hardships that they went through, how they came to be, the fun stories along the way. Peter Wall, you're the CEO, part of the founding team, but you're the CEO of Argo Blockchain, a publicly traded, large-scale cryptocurrency mining company headquartered in England. You guys are the only crypto mining company that's listed on the London Stock Exchange. And congratulations, I just saw an article the other day that you guys announced that you passed your 1,000 Bitcoin mark of that. You've mined 1,000 Bitcoins. You had mined like 160 something that quarter. Congratulations. That's like a big freaking deal there. Like very less than a dozen companies that have been able to do that on an industrial scale. Congratulations.
Thanks, dude. Thanks. It's a lot of bananas. It's a lot of bananas in the fridge. You don't keep bananas in the fridge, but if you did, it's a lot of strawberries in the basket.
I had this group of people approach me at Bitcoin Miami a few weeks ago. And they're like, yeah, we want to industrialize Bitcoin mining. We want to industrialize mining, industrialize. And I keep hearing that term over, like they were looking at our industry as we were still kids. And I know we are. But the way I would have gone around about industrializing or like doing what they were trying to do, because here they were a publicly traded company, was it seemed to me like set up an office, you get some people together, even in a Zoom call, and you start brainstorming, you get the equipment together. These guys were just like, get it, in my house on a Saturday, let's call the mining brokers, let's get some equipment down. And I'm like, that's not industrialization of mining.
No, and it's already happening. I mean, that's the thing, right? And the best way I always tell my kids, I've got three boys. I always tell them, you want to learn how to be a good basketball player? Go play basketball. You want to learn to be a good miner? Go mine. And that's what's cool about the mining industry is that it's grown up very organically from people who are miners. Like if you look at our team, Perry Hati, who's our CTO, that guy's been mining in his basement, back to 2011, 2012. And so there's this kind of natural organic growth from GPU mining to ASIC mining to large scale mining. And that's how you get good at things, by doing them over and over. And the idea that you can just throw money at something and, be able to figure it out and leapfrog above other people. I don't think it's true. I mean, look at what's happening right now with Chinese miners, looking for power in North America, looking for power in other parts of the world. They've got lots of money. They're well capitalized. They've got machines and they're having trouble. So it's about building relationships. It's about building expertise. It's about, locating yourself in certain jurisdictions and going from there. But it's a fascinating space and it's moving quickly.
Very few months ago, or 6 months ago, the world was singing a very different tune in terms of Bitcoin mining is so energy dependent and it's really, really bad for the environment and it's really, really terrible. And I have to spend the past decade of my life explaining how wrong that is, but we won't go there at this moment. But what China did, and I'm not going to ask you why you think they did it, but for those who don't know, China essentially, or one province where a lot of, like a significant amount, like 20 or 30% of the hash rate was being mined, kicked out all of the miners from effectively from that region. And now you have this, it sounds like this crazy amount of machinery floating around the world looking for another home. Are they being stripped? How can you trust the machines? What is going on, like from the outside in? Is it good or bad for our industry? What do you think?
I think it's good for the industry. I think it's bad for the Chinese miners in the short term. I feel for them. I mean, they've built these businesses. They've built infrastructure. These are real,
Companies and people, yeah.
entrepreneurs. Yeah, companies and people that have been located in China for in many cases, up to a decade, and have 10, 15 exahashes of power, like just enormous amounts of power. And so for them to have to kind of try to find a solution to that really quickly, and is difficult and is challenging. So I think for them, short term, it's not great, but obviously worse than not great. And then, but in terms of the long term for the industry, it's going to encourage more decentralization. It's going to encourage mining in places where people want miners. I mean, you see Texas now is just attracting a huge amount of miners It's a pro-business state. The governor has said he wants to attract blockchain projects to the state. There's all kinds of renewables that are there. And you're seeing that in other jurisdictions. We're in Quebec. They've been open to miners until they weren't, but now they're open to miners again under the right conditions. So there's different places in the world which are going to become, these meccas for mining. And there's certain places that are not going to be. And it looks like China will no longer be.
It seemed like China did us a favor. Well, why? And I know I wasn't going to ask you why, but I racked my brain. It doesn't make any sense. They helped Bitcoin so much. This is something that we've wanted, further decentralization. Sorry.
Yeah, I mean, I'm not an expert on China. I have spoken to many Chinese about this. There's lots of conversations going on in the community. I can say a couple things on it. So one, it's clear the Chinese are interested in promoting and building and having their Chinese nationals adopt their own digital currency, the digital yuan. And anything that competes with that is going to get in the way, and Bitcoin competes with that. So they're trying to, I think, one theory is they're trying to clear the deck to make space for the digital yuan. They've already done lots of innovation on it and lots of development on it, and it's coming if it's not already here. So that's one piece. And then on the second piece is climate. Climate change is real around the world, and China has their own climate commitments and their own large middle class of folks who out there breathing the air and engaging in their daily lives and want to be in a non-polluted China. And anything that Chinese middle class is going to push back against, in a one-party state, you don't want to upset the middle class, because that's when there is no government to vote out.
Sure.
There's so I think this is as much about showing that they're doing something towards their climate commitments. ESG mining or coal mining was getting a bad rap, not just around the world, but also in China. And look, those are two theories. That's speculation on my part. I'm not an expert in China by any means, but it's super interesting development.
How much hash rate dropped at one? It was like 20%.
It's crazy, Charlie. It's crazy. It's gone from 180 terahashes a second, where it was, if you look at the charts, where it was 8 weeks ago, to it touched 90 terahashes this week. So it's dropped by about 50%. And for a miner like us, what it means is, in the short term, meaning this month, we'll probably mine, given that difficulty takes a little while to adjust, because it adjusts every 2 weeks.
This is a great lesson on Bitcoin. Can you explain to my listeners, for those who don't understand, like what happens when the hash rate, and how does it affect the security of Bitcoin?
Doesn't necessarily affect. This is the great thing about the Bitcoin network. The hash rate is things kind of even out, right? Bitcoin is even Steven. So hash rate goes down, but then difficulty goes down. So the beauty of the Bitcoin verification system is that it's still secure, whether there's 180 terahashes or whether there's 90 terahashes. Obviously, the more hash rate there is on the network, competing for verifications, the better. But it's still extremely secure. There's no issue about Bitcoin kind of just blinks, and in the end, who gets the most advantage in a short term situation like this, as miners like ourselves. We'll mine with the same amount of hash power. We'll mine Bitcoin. We'll mine 6% more Bitcoin, this month than we did last month. Next month, given where difficulty is and where it's going, we'll probably mine 25% more. That's a projection, but we'll mine probably 25% more than we mined, in this month. So you're looking at significant, advantages for existing miners. But in the long term, the hash rate will even out.
Yeah.
And people, you're right, that a lot of people don't get the importance of difficulty when you're looking at miner profitability. It's the kind of one forgotten factor from, the general Bitcoin.
Yeah. It's the easy one to forget when you're writing about what's wrong with Bitcoin. Yeah. It's easy.
Yeah. Right. You're like, Bitcoin price is going up. Miners are killing it. Well, if hash rate goes up at the same rate that Bitcoin price goes up, your margins stay the same.
That's what I explained to these guys when I was mapping out their mine. I was like, well, so they're like, where did this number come from? And I said, well, you have to assume the hash rate is going to double by the time you
Yeah.
get your machines online.
Yeah.
That's like a very conservative,
Correct.
you're gonna, whatever you think you're gonna make, you're gonna make 30%.
But
In the first.
we were expecting it to get, to 200 at some point this year, right? And it was up at 180. There was more machines coming online, and now it's at 90. And that's the crazy thing about the China situation, is that it's thrown this huge kind of, it's
But we
not a
were so
wrench, but
here.
yeah.
Here's a really good kind of question, and one that no one's really talking about is for the last decade or so, at least since I've been charting Bitcoin, 10 years. The one kind of like chart that I would always fall back to make me feel better in ultimate bear markets is that the hash rate always kind of correlates with, and the
Mm,
difficulty with the price
mm,
of Bitcoin, or like the
mm.
7 day or the 200-day moving average or whatever it is.
Yeah.
Um, and that, and so now we're like at a 50%, give or take 40 something percent drop there we were from price a month or two ago, or 3 months ago. I forget the exact date. But at the same time, the fundamentals haven't changed, but the one that has is that hash rate did, have temporarily. So to me, that's like the best time to buy Bitcoin, because nothing else has changed except for FUD and the hash rate. Now you can say, the hash rate's never going to come back. But why wouldn't, if the machines are built, why
Oh,
would
but the
people?
hash rate will come back. The
Exactly.
Chinese, they'll find places for the machines. It might take 6 months. It might take 12 months, but the hash rate will come back.
Oh my
I
God,
mean,
there's
there's no
private
doubt.
jets over in China right now bidding for all those machines. Fred
Yeah.
Wilson's talking about whenever China bans something, you invest in that. He's got the first plane ticket. Of
Right.
course.
Yeah. It'll come back. I think you're right. And you're right. I mean, hash rate and price are correlated. The key word there is they're correlated. They're not exactly, they don't move in lockstep. So they, when there are these one-off situations like we just had, where hash rate comes down and price did have, it responded. If you look at what happened earlier this week, we dropped below 30 for the first time in a little while.
Yeah.
And then it's come back a little bit, but there's definitely a correlation. But it doesn't necessarily mean that they move in lockstep. And I think that, it's just a fascinating development that's happened that no one saw coming, and we'll see how price responds over the coming, weeks and months.
I was on your website here looking to see, is it public, what hash rate you guys are working with and how many
Yeah,
machines you all have?
yeah. So we've got 21,000 machines.
Oh my
We've got
God.
we've got an exahash, so just over an exahash of capacity.
Congratulations.
Yeah, thanks. And we're adding, more machines. We'll be up to 1.6, 1.7 in the third quarter of this year. So yeah, we're a mid-sized miner. Look, there's lots of folks out there that are bigger than us.
It's
We
the
have a kind
perfect
of
size.
what we call a smart growth mentality. So we don't think bigger is always better. You can have 100,000 machines and still be not profitable if they're not the right machines and not the right power cost, and you pay too much for them. So we really look for opportunities to expand in a smart way, and that's what we've done over the last 3.5 years of our existence. All the machines that we've ever bought have ROI'd, which is great for miners. Obviously, that's the name of the game, is to RO, and some of them many times over. So you ROI your machines, and then you either hold on to that Bitcoin or you reinvest it back
To more machines.
into more machines.
Wow, with a pretty crazy, chaotic year behind us, the guys at Bit Casino, my friends, are offering us 200 free spins for the Legacy of the Dead game. These guys are awesome. Over the past year, we've done promotions together from Valentine's Day all the way to St. Patrick's Day, and from celebrating all the different holidays in between, we've been doing crazy promotions, giving away Teslas, like 3 of them, and all you have to do is go to untoldstories.link/BitCasino, hit the rewards section, and claim your 200 free spins on the Legacy of the Dead game. These guys have been helping out Untold Stories for over a year now. Fun, fast, and fair gameplay. Bitcoin, Ethereum, Tron, and Litecoin. I mean, you got everything. Go have some fun. untoldstories.link/BitCasino. Mining is very extremely capital intensive because there's so many what ifs and variables that you don't know. I was talking to folks who drill for oil, and there are like these, and also farmers too. There are like huge financial products that are available to those folks to like
Mm.
help them, like even Steven, almost balance out their cash flow and everything. Do you guys have the same access to the same type of financial products? Like, how do you raise money?
Yeah, so it's getting there. It's getting there, right? It's a really good question, actually, because it's such a new industry, and there are groups that are popping up or that have popped up that are you're offering financing. So to miners and to people in the crypto space. When you think about our kind of our cash flow and our balance sheet, we essentially can raise money in three different ways to pay operating costs or to buy new machines. One is we can sell Bitcoin, which we obviously not our preference. We did it a lot in 2020 when our balance sheet called for it. We haven't sold one Bitcoin in 2021 so far. We've held on to every Bitcoin that we've mined. So people ask, okay, so how are you paying for your operating costs? You have real power costs, you have staff, et cetera, et cetera. You're buying more machines. So obviously, two other options are raising equity. So through institutional raises, we've done two of this year. Small raises in the grand scheme of things, around 35 million. And that's when appropriate. If the market can support it, it's a good way to fund the company's growth. The third way is debt, and debt secured against Bitcoin is an option. Debt secured against machines, that's another option, and then debt secured against facilities, through mortgages and those type of things. So on those first two ones, on the debt, secured against Bitcoin and debt secured against machines, there are groups like BlockFi, like Celsius, like Galaxy, like DCG. NYDIG just bought one. I think Arctos. I think that's So, and they're basically doing miner financing or cryptocurrency like blockchain financing. So you go to them and you say, hey, I want to buy X amount of machines. What kind of interest rate can you give me? It's not the same kind of interest rates you get at a bank because we're such a new industry. We're not there yet, but it's reasonable. It's a good way to support your growth. We did a deal like that with Celsius at the end of last year for a chunk of machines, and that's worked well.
What's the benefit to being a publicly traded mining company as opposed to like a private one?
Yeah, it's really access to capital. You're able
Very
to
smart.
raise.
Yeah.
You're able to raise equity in a efficient way, and then to put that equity back into the growth of the company. And I also just like being a public company because it aligns with, in many ways, the spirit of crypto, which is to be transparent, to be open, to communicate. And we've really embraced that at Argo. I do a lot of like Twitter Q&As with videos and I do podcasts like this. And we had our AGM yesterday. We had like a
What question do you get asked a lot?
On Twitter, I get asked, honestly, the number one question I get asked is about NASDAQ. Like, hey, why aren't you guys on NASDAQ? That's a question I get answered all the time. What else do I get asked?
It's hard to uplist on NASDAQ. I'm an investor in another publicly traded company that's trying to uplist on NASDAQ potentially. They haven't told me, but it's a hard thing to do because they're traded in like 3 other markets. I feel like when our companies can like pierce that, see like eventually it's going to be insane the amount of capital that starts cycling through our industry now because the money is just circular. It goes through, and the dollars are just a large sink of where to keep temporary value or whatever.
Yeah, it certainly seems that way with the USD right now. Look, the American capital markets are the most efficient place to raise money in the world, and the most have deeper pockets than anywhere else. And you've seen, Michael Saylor's done some fascinating things with MicroStrategy recently as a large pubco, whether it's bonds and he's fired up an ATM now. Like he's taking basically that capital and putting it into Bitcoin in a very direct way. Obviously, we're doing that in our public market world in a slightly less direct way because we're buying machines and then mining. And there's a case to be made for both. We obviously think that mining is a great way to grow a company and to accumulate Bitcoin.
Wait, so you would recommend if someone were to come and say, hey, I want to be able to power up 10 machines, potentially would recommend, like, what are the economics behind that?
You mean if someone's just going to power up 10 machines in their basement?
Or well, no, like you're a large company, like 10 machines is significant amount. I figured 10,000 per machine, or I know some of them are the SJ19s are going for 9,000 right now, or potentially. Yeah. So, I was, by the way, I mined I owned the second ever ASIC that ever hit the Bitcoin network. I
Nice.
mined on it for like
Nice.
the first month when Yifu Guo, who invented the ASIC with Avalon, and before he sold it, the first one he sent to Mike Hearn, and the second one was for him. But we were like neighbors in Brooklyn. He didn't have a car, so he called me up, and that was literally what I was good for. It was my car, my trunk of my car, this huge machine that went in the back and had no sides or walls. And there's a famous
Wow.
picture of us, me, Yifu, and Eric, with mining on the Bitcoin price was like a few dollars.
Nice.
And
Amazing.
but I remember turning. It was just so loud. 30-person office. That one machine was louder than all 30 people working. So just to give you an understanding. Oh my God, yeah. What
Well,
is
I
that?
keep on. This is an old S9, which is no longer
It's the classic
operational.
machine. Yeah.
Yeah, the classic. This is like it's like the Nike, like the Stan
Yeah.
Smith, sneaker. This is the
It's the Honda
S9.
Civic of Bitcoin
That's
mining.
it. That's it. Exactly. Yeah. So yeah, no, the ASIC world has really obviously transformed mining from the old GPU days, and
What's
it's
next? Will there be
so
another level?
next is immersion. I mean, 100%. That's
What
where
is
we're
that?
going. So immersion is you take this machine, and you take off the fans, and you dunk it in liquid, and instead of cooling it with air blowing through it, you cool it by cycling liquid in and out of essentially a tank or a bath, like a container.
Well,
And
wait, what kind of liquid? You can't put water. It has to be
you
like a
cannot
liquid
put
that
water. No.
conducts. What's
Yeah,
the
it's like
liquid?
a non-conductive liquid. It's specially designed immersion liquid. Um, and that's the future. That's the future of not just crypto mining. That's the future of data centers. It's just way more efficient. You can do things with the liquid. You can heat other buildings, or, potentially,
Yeah,
yeah,
create more electricity again. It's a way to
yeah,
harness the
yeah,
excess heat. Yeah, you harness it. It's very brilliant. It's very listen. When I went to Croatia, there were guys that were aging wine underwater in these like bamboo caskets for
right.
like hundreds of years. And they never understood the science behind it, but they just knew it made sense. It's the same type of situation. It makes sense. Yeah, of course, you
Yeah.
put wine underwater, no vibration, the temperature it doesn't change, all these different variables. It's so brilliant. A good wine too.
Well, one of the cool things about immersion mining is that, one of the defining features of crypto mining, Bitcoin mining, is the noise, right? You go into a mining center, or you go into a data center, and it's just deafening. It's really loud because of all the fans that are blowing the air around through the machines. But immersion mining is silent. There's no noise. You just walk in, and it's just the pumps, cycling in and out the liquid, through the tanks. So it's the future. We're joining in Texas in a big way. We're building a 200 megawatt
Wow.
facility down there. It'll be all immersion, and we've got our CTOs come up with some great designs, and it'll be large scale immersion, and we're excited about it.
You wouldn't think that the hottest place in America would be like the epicenter of mining, global mining. It's like you would think it would be in Norway or something. Like what is
Well,
going
certainly
on?
that was the case. Certainly that was the case in 2017, 2018, 2019. People wanted to be, we're in Quebec. People are in Scandinavia, Iceland, because air cooling, when you're cooling with air, you're not using air conditioning. You're using ambient,
Yeah.
air from the outside. You're sucking it into the building, pushing it through the machines, and then getting it out. But with immersion, and really, if you're going to build it's hot in Texas in the summer. If you're going to survive in the summers in Texas, you can do air cooling, and there are people who are doing air cooling in Texas, but the most effective ways is definitely immersion. And that's why you even see, talking about mining in El Salvador, talking about mining in warmer climates. It's now becoming possible because of these developments, in immersion. But the big attraction, Charlie, to Texas is the renewable power, and the fact that the grid is this kind of standalone, independent grid that's not connected to the national grid. So there's nowhere for the power to go. It needs to be used in Texas, and there's lots of
How
power
did
being
Texas
generated in remote regions, and it needs to be used. A lot of that, in order to make the system more stable, there needs to be large load capacity taken, as close as you can to generation. So that's what we're doing. We're building right next to a
it
five
creates a
gigawatt.
counterbalance?
Yeah, exactly. And then you
Oh,
build in Texas
interesting.
for peak load, right? You don't build for your everyday in February. You build for July 15th when it's 100 degrees, and so the rest of the time, all of that power that's not being generated, you can still generate it, and you can use it for Bitcoin mining, cryptocurrency mining. and it acts as this kind of accordion where most of the time it's being used for crypto. And then on days of, extreme high demand, you shut down the crypto, you get extra low power costs the rest of the year. And then you give that power back to the grid on the super hot days.
I'm looking at like a map of the US like power grid. Why is Texas completely it's an anomaly? It doesn't, so like the western half of the US is its own grid. The eastern half is its own grid. It looks like the south and maybe Florida has its own thing going on. I think Florida, I can't tell, but why?
It has to do with the historical infrastructure build and the way in which the state government decided that they wanted it to be their own deregulated competitive market. And so, the ERCOT grid was built to be a standalone Texas grid. And there's advantages and disadvantages to that. Obviously, during the last big power outage, during the ice storm or the winter storm that took place 3, 4, 5 months back, that was a disadvantage for Texas because they couldn't bring in power from elsewhere. But for cryptocurrency miners during that time, yes, many of them had to shut down for a week or 3 days, 5 days. But they were able to actually give their power back to the grid, which is great because communities get to use that power. And, we're not going to use it for crypto when there's times of need.
So these grids are not connected to each other.
No, they're standalone. It's a really fascinating world. You could do a whole podcast just on the Texas power system and all of the power purchase agreements.
I'm going
the load responses, like this, the technology you can set up to be responsive as
doesn't make stupid question. If like the Texas energy grid fails, I'm literally going to get kicked off of podcasting for asking the dumbest question ever. It's so stupid, but there's no like mega fiber optic cable that can like someone can run from like Louisiana over to Texas, like just plug it in. Like it's not possible. Stupid question. I don't know.
We got to get our Texas power friends on the ground, but
so it's their choice.
My understanding is that no, it's expensive to move power around, and you also lose a lot of power. So I think as much as possible, you want to be close to where it's being generated.
Got it. Power latency and the degradation of the power definitely. As soon as you try to store it or move it, the quality starts going down.
Going down. Yeah,
that's such a big thing. I want to move on to another question about proof of work versus proof of stake. You're obviously energy ties into it so much because you take the most basic concept of physics that energy cannot be created or destroyed, only transferred. And the price of Bitcoin, and we talked about how the difficulty and the hash rate almost very, very, very closely follows. We don't know if it correlates, it's correlation or causation, but it follows the price chart. So if we're looking at that, we can say, okay, you have direct energy transfer from other sources, whether it be renewable or shitty sources or whatever, into this Bitcoin thing. It's beautiful. Like it fully makes sense. But proof of stake, it doesn't really make sense to me. And I've been in this industry for a very long time. Okay, it does make sense to me. But I want to hear your take and your side on it.
Look, I mean, the first time you hear about proof of stake, you're like, oh, that's interesting. Like you can get all the benefits of proof of work without using any of the energy. But then the more you look into it, and I just did an interview with Henry Kwan from Epic, who's one of our partners. They're building machines for us, and he was pretty eloquent on his take on proof of stake, and he hates proof of stake. But because the more you look into it, you're more like, well, what is this anchored in? It's kind of anchored in air. It's kind of anchored in, these huge stakes, obviously, of whales that are sitting in certain places. Well, that's not very decentralized. That sounds like a bunch of dudes who are just hanging on to their coin and making interest off of it. Sounds like a bank, actually. So, look, I mean, I think it's interesting that there's innovation happening around other consensus mechanisms and conversations about proof of stake and proof of space and, other ideas.
Yeah, I invest in some of them too. They're cool.
Let's have those conversations. I'm not a Bitcoin maximalist. I'm not saying, Bitcoin at any cost, or Bitcoin above everything else.
I agree with
It's
you.
an ecosystem. There's other folks out there joining things. Great. And we've invested in, Argo as a company has invested in DeFi. We believe that there's a role for digital infrastructure. But it's clear that over the last 10 years, the physical infrastructure that has secured the Bitcoin network, the proof of work system, is the most secure, is the most rooted in, as you said, energy. Rooted. And what is energy rooted? Energy is rooted in place. It's rooted in capital, because you need to spend money to build out that infrastructure, whether it's machines or it's, power infrastructure. It's rooted in political capital, because you get places like Texas or Quebec, or, Baie-Comeau in northern Quebec, where we're mining with one of our facilities, where the mayor says, this is great. It's an opportunity for us to get revenue and to use power that would otherwise go to waste. So it's much more anchored in the real world. And I think for Bitcoin, it's made it very resilient, and it's shown that it's there's never been a 51% attack. I mean, Bitcoin has been rock solid through its entire lifespan, and I think a huge part of that is it's built on this proof of work consensus mechanism.
It's such a beautiful thing, and the answer is essentially it works because it works, and we have the last 10 years to prove it. And then you have existential crises that we've seen in the past that the market resolves itself. And because we've given the market a super efficient rails to resolve itself with, things get resolved a lot quicker within, crypto or Bitcoin ecosystem, or sorry, with a proof of work ecosystem than it would with any other traditional. And it's a beautiful thing. It's like now perfect example is half the hash rate drops, it's going to be turned back on. You're going to see there's an economic incentive to turn them back on. And you have all that 10-year history to behind it. And then, like a few years ago, it was like 7 or 8 years ago, one of the pools got almost like crazy double digits of the whole total hash rate. But then that actually started a conversation into the development of like furthering with pools not being able to have the vote when it comes to that. But at the same time, it keeps responsibility. And it sounds to me like you have not only like a financial responsibility to shareholders, but you almost have like a moral responsibility to the gods of Bitcoin, or to the Bitcoiner and to Bitcoin holders and everything. Like, is that one of your challenge? Is that probably your top? If you were to go on vacation, in a month from now, and you have to plan your vacation, what are you thinking about while you're on vacation, even though someone else is dealing with everything?
Well, first of all, I haven't taken vacation in a year and a half, so the idea of vacation sounds great, but I keep thinking literally, Charlie, like, oh yeah, well, next week or like next month, things will quiet down, and then I can like maybe, take a couple days off, and it hasn't happened. Um, but I like the idea of it happening, and I like the concept. But okay, let's say I was to go on a theoretical vacation. What would I worry about? Um, I would worry about always for us. It's about executing on what we've said we're going to do. So we're building this large facility in Texas. Um, it's a large scale immersion facility. There's three components to it. There's obviously the site, the superstructure. There's the immersion, technology and design and systems that we need to put in, and then there's all of the power infrastructure that we're building our own substation. We're connecting into a existing
Yeah.
utility substation. So that's what I worry about. I worry about execution. How do we make sure that we execute on time, on budget, and achieve what we said we're going to achieve? And so far, we've been very good on it on the execution side. So I don't stay up like all night thinking about it, but that's what
Yeah.
I would worry about. In terms of what you're referring to, which is this tension, which certainly exists between for pubco Bitcoin miners, between being a public company and answering to shareholders, and having shareholders who believe in the vision of the company, and who ask reasonable questions about where we're going, what we've done, all of that. But like any shareholders, and our company shareholders are awesome, by the way. They're super engaged. We're primarily retail. It's a very grassroots kind of group of shareholders, and I love that. Um, and then the Bitcoin community, and that's the other side, right? And
Yeah.
in many cases, these are overlapping. Like, it's not necessarily binary. There are people who are both members of the Bitcoin community and who are investors in companies like Argo. But obviously, the Bitcoin community is about decentralization, is about supporting the core principles of Bitcoin, and our a little bit like the internet community, was 20 years ago, like skeptical of the corporatization of Bitcoin, and rightfully so, right? Like the co-opting. I was going to say the
But here's the
co-optization, but that's
difference.
not what. Yeah.
But here, and we never knew this was going to be. It's such a great way to end off, to bring it back to the beginning of what you were saying. You could only become a samurai by going and training with another samurai for a certain amount of time. You can only become a mining executive CEO if you really understand how things work on the ground and be trained by other miners. And the other miners that are training, there's almost like a school of thought probably that's like you guys put down on your, you have someone comes in and they're working for the company and they want to learn from the ground up how everything works. There's a certain ethos, like a certain, like, why we're here, why Bitcoin is amazing, why proof of work, that, like, the book of Satoshi that you guys are learning and you're following. So, like, yeah, the corporatization may be something that we were scared about, but we need Bitcoin needs its corporate executive, warriors to go out there. And this is the perfect way, especially in an industry that needs to be learned from within.
Yeah, no, I agree with that. And I think what's cool about our company is that we're Bitcoiners, we're crypto people. And,
Love it.
There are other pubcos that have come from more of like the financial side or the data center side and then come into mining. And we've come, like, you talk to Perry, he's been mining for 10 years in his basement. Sebastian, our VP, like our core team. And we've made a little documentary on our YouTube page. You should check it out.
Check it out.
It's like, there's like 5 or 6 episodes. It tells the history of Argo. And it's very watchable. They did a great job on it. And what I like about it is that it shows our authentic connection to, Bitcoin and crypto. And that's our roots. That's where we're from. And yes, we're a publico, but we really try to, like you said, marry these two worlds and take all of our, learnings in the grassroots and bring them to the core. Like, we're a very non-corporate,
I love it,
entity.
I love it. Thank you for everything that you've been doing. I'm going to go check it out. Peter Wall, CEO of Argo Blockchain. We'll have everything in the notes of the show. But thank you so much for taking the time. I wish I could. I feel bad now that we did the show. I could have given you like a 40-minute vacation. But
no, it's all good. It's good. I loved it.
Thank you
Love
so
being
much.
on. Thanks, Charlie.
I'll see you later.